Hi, I'm Sandy Ray, founder of Sandra E. Ray, CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk to you about the challenges that nonprofits face when applying for loans. Whether you need a loan to maintain your existing operations, you want to launch a fledgling operation, or maybe you have a new program or you want to expand an existing program. All of these things take financing and capital. And a lot of time, it's hard to find suitable funding options. Finding financing is not impossible if you know where to look. The question is a business loan a viable option for your organization? And if that is true, then where can you get your financing? First, I want to talk about why nonprofits have troubles getting business loans. And generally, it's because of our business model. We are out there to create an impact in our communities, not to create a profit for the individuals involved. And banks are all about organizations that are creating a profit. Lenders consider nonprofits higher risk borrowers because they don't always trust that we have the cash flows to pay off the loan. So what can we do about this? Well, there's several ways to get funding. I want to talk to you about 7 general areas. Obviously, we have our normal fundraising, our donations, our membership fees. These are our major sources of income for our organizations. But from time to time, we may need a cash inflow that we don't have in our reserves in order to do some of the things that we want or need to do. So what happens when you need additional funding? A loan is not necessarily out of the question for our organizations, but where can we get the financing? So I want to talk about 7 general topics. The first one is a community development financial institution, a CDFI. These are institutions that their mission is to facilitate community growth by providing financial assistance to businesses and consumers in low income or disadvantaged areas. CDFIs are typically nonprofit organizations themselves. They may take the form of a bank or a credit union, or even a venture capitalist. Usually they don't operate on a national scale, so you'll have to check out your area to see if you have a CDFI that's available to you. They tend to be micro lenders, offering loans of $50,000 or less. And they tend to charge slightly higher interest rates than banks do. You're going to have to submit a lot of documentation, and it can take a long time for the application process. Another source of funding that I want to talk about are banks and credit unions. Though it's much harder to get a loan from a bank, it's not impossible. Even banks want to flex their philanthropic muscles by offering grants and loan programs. So banks may charge a higher interest rate on loans to nonprofit organizations due to the high risk involved. And you might have to be an established organization. You might not get, as a brand new organization, you might not get a loan from a traditional bank. But either way, you are going to have to show that you are able to repay that loan. So there's going to be a lot of documentation with regard to your finances and your cash flow. Credit unions, on the other hand, are generally nonprofit organizations themselves and are more likely than traditional banks to offer a loan or grant program to nonprofits. Since credit unions don't pay taxes because they're tax exempt, they can offer more competitive rates. A credit union may also be more likely than a bank to extend a loan to a newer or smaller nonprofit organization. Now, these loans tend to be smaller than traditional banks, and you may have to have a checking or savings account at the credit union in order to qualify. Basically, you have to be a member. But it's important to know that when you apply for loans, either through a bank or a credit union, that they specifically work with nonprofits. If they are already working with nonprofits, then that institution will understand your nonprofit organization much better than an institution that has never dealt with a nonprofit organization. And they're going to be more likely to accept your application. A third source of funding that I want to talk about is crowdfunding platforms. This is especially helpful for startup organizations that are less likely to qualify for a bank loan. There are various types of crowdfunding, and depending on the platform that you use, you may be able to obtain just donations or maybe even an interest-free loan. It's extremely important that you familiarize yourself with the laws regulating solicitations in various states. You may have to register. We've talked about this many times before. There are over 40 states that require charitable solicitation registration. So when you're doing this crowdfunding, you're going to be, soliciting in various states. The fourth area I want to talk about is an area we're all familiar with, which is grants. Grants are another form of funding for our organizations. They can come from government sources, business associations, corporations, or even other nonprofit organizations. Typically, grant money is intended for a very specific purpose, and if it's a government grant, there could be some very rigorous vetting and application process. If you're interested in searching for government grants, you can check grant.gov. This is a centralized source for all U.S. government grants. But I recommend you also do a more targeted search in your area for your particular region or in your area for the community that you serve, whether it be healthcare related or social or mental health or homelessness. Those kinds of things different nonprofits or foundations tend to give to certain types of areas, in that way in your location doesn't really matter. If you operate in an economically distressed region or serve a disadvantaged demographic, you might be eligible for special grant opportunities. For example, there are grants for women-owned businesses or for women, grants for minorities, grants for veterans groups, kind of like we talked about before. The fifth area I want to talk about for financing for nonprofits is nonprofit loan funds. Now, there are nonprofits out there that are institutions that offer loans to other nonprofits. This is especially in underserved communities. So a lot of times, like CDFIs would be an example of this, but there are other nonprofit organizations that are doing this. Typically, you're going to get a loan from one of these organizations. The interest rate is going to be lower. Sometimes you could get a 0 interest rate loan, just have to repay the principal, and what gets repaid back goes out to loan to the next organization that needs it. Then the sixth area I want to talk about is online loans. Now, obviously, we can go out online and get a loan, and nonprofits can be eligible for these loans as well. However, these loans have higher interest rates. They have a little bit more relaxed requirements, so it's easier to qualify for than a bank or a credit union. More established nonprofits may be eligible for larger loans, where a new organization may only be eligible for a smaller loan. You may have to settle for higher interest rates if you're a smaller organization as well. Despite the higher price tags, one benefit is their speed and convenience. It's really simple to apply for these loans, and you can have the funds in your account within a few days. And one thing I want to say about these loans is many times they will require a personal guarantee, so that an officer or director will have to personally guarantee that the loan will be repaid. That's something that you want to consider before applying for the loan. And then this brings us to personal loans. Do you want to take out a personal loan? Especially, this happens probably a lot when We've got a brand new organization that's just getting started where the founder will take out a personal loan and use that to start up the organization, and then the organization or the founder pays back the loan. And then finally, I want to talk about corporate giving programs. Even if you can't qualify for a sizable loan or grant, there are other things that corporations are doing to help nonprofit organizations in their communities. And that is partnering with them in many different ways. Now, these businesses are motivated for PR reasons, or they just want to give back and help their communities. And they generally tend to, especially if it's a smaller organization, focus in the region that they live and work. So they may give you a sponsorship for a fundraising event. We're all familiar with that. Non-cash donations, whether you need food, blankets, diapers, whatever it is that you're looking for, or personal care items, those all can be contributed by businesses in your area. But this third one I really like. There are many organizations, and I know that in Indiana, where I live, our CPA Society has a volunteer day. Now, that's just something that our nonprofit trade association does, but many businesses will have paid release days for employees. They get paid to go to a nonprofit and do what needs to be done at the nonprofit, whether it's stuffing envelopes or painting or, doing some yard work. Whatever it is that needs to be done gets done by the volunteers, and the employer pays for those employees to be there. So take advantage of those corporate giving programs. Now, sometimes this requires some creativity and hard work. You have to get out there, you have to get to the local businesses, you have to make them aware of your organization and what your needs are. But the turnaround thing is these organizations, these businesses will generally promote what they're doing in the community, which gives exposure to your organization as well. Now, to summarize, loans for nonprofits are not all that different from loans of any other business type. Nonprofit business model in some ways is very different than a for-profit business, but we operate the same in many respects. We all need working capital. We have operational expenses. We want to expand our services. And so there are valid reasons for seeking financing, regardless if we're a for-profit or non-for-profit organization. While nonprofit financing options are somewhat limited, you may actually have an advantage over for-profit businesses when applying for loans with a CDFI, a microlender, or a nonprofit loan fund, and especially for grants. I hope this was helpful for you. I want to thank you for joining me today. And remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we would love to help you cut through the noise.